This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, the SPY technical analysis. I will be going over Bitcoin as it is dropping quite heavily right now. And I will be discussing the treasuries for the week of November 17th, 2025. And with that said, let's go ahead and get started with the data. I do want to preface this video. On Friday, I spent the pretty much the entire day in the hospital. I ended up having a seizure for my procedure. Uh, so with that said, I've been having a really tough weekend. I'm still feeling very sluggish and just not so well right now. So I apologize if I sound a little withdrawn, but you'll just have to forgive that. Anyway, with that said, we have a very busy week this week, as you all know the government finally reopened, and that means that we're finally going to be getting data sets again. Now, we have a whole bunch of data that's listed, and I'm going to go through it all, but we could also be getting all sorts of random data sets thrown in here that aren't being listed. I don't know exactly what type of data, but anything from when the shutdown was occurring. So just be aware of that. If we see some random massive spike or drop in the yields, if you see a massive spike or drop in tech, um, look to see if there was a data set that was released. Um, because that could very well explain what's going on. So just wanted to throw that out there. But going over the actual data, and I want to read my notes that I have on the side here in a moment, but as I said, we have a very busy week, but I'm just going to do the spoilers. The main days this week are Wednesday and Friday. Um, Wednesday, we have the 20-year bond auction and the FOMC meeting minutes. As you know, we still had the FOMC last month. It's still very key to hear what's going on. What's going on with the Fed speakers and everything. So, obviously, we want to read that. We want to see what everybody really has on their mind, because I know a lot of the Fed has been coming out extremely hawkish, almost out of nowhere. And I know some people might say, oh, well, they've always been talking about the inflation. They've really done a pivot in their stance of we need to be neutral to inflation. Don't even worry about the job market, inflation. And I believe that's an incorrect um incorrect signaling that they're trying to put forth. And then we have members like Moran who is saying the opposite. They're saying, no, inflation isn't the issue. It's the labor market. We need to cut the rates. And we're going to see very soon which major thesis is the winning thesis. As the market is really in kind of turmoil over it right now. They can't decide if we need to be prepared for upward inflation and for the bond market to get pummeled for a whole nother cycle, and for not rate cuts to happen, but potentially rate hikes. That's re-entering that tightening phase. Which the Fed really doesn't want to do. The Fed has made it extremely clear, at least from my perspective, that they want to cut quantitative tightening on December 3rd. That is one of the main steps to entering into a totally neutral stance of not pushing the yields down, not pushing the yields up, not really having any major impact on one side or the other. Okay. So they are doing that. They're not going to cut that off. They're not going to change their minds on that. They're doing that for a reason too. If they thought that the upward inflation was a major risk, we would not be seeing quantitative tightening ending, because that is how you counter the upward inflation. Is you basically, continue to pull collateral out of the system, and you do that by pumping in a ton of high yield short-term uh, treasury notes. And when you're exiting that stance, that means that you're ending the burn cycle essentially. And that burn cycle is that tightening upward cycle. So that's why I have a lot of confidence that what the Fed is saying right now really isn't what's happening with the economy and what's happening with the treasury market. And I believe the treasury market is agreeing with us, but we will really see, especially the 20-year bond on Wednesday. That's the main reason why that Wednesday is very, very important this week, is we have the 20-year bond at 1 p.m. I do anticipate the yield to pull down, not very, very much at all. I expect this to be around the 4.44%, give or take. Um, some others are going to expect this to start moving up to the 4.6%. I disagree with that, but we will see throughout this week. Um, the 20-year bond has to price in upward inflation. So if upward inflation is seriously a concern, then the 20-year auction will catch it. Um, so that's why I'm putting a lot of weight into that auction. There's also the tips auction on Thursday, and that is the interest uh, or the inflation protected security treasury form. Um, it's like the long-term treasuries, only except they are hedged against inflation, moving upward or downward. So you can look into that a little later. I don't want to really go into that a whole lot, but people buy those if they're hedging against inflation. So if the whole upward inflation is a risk, and if the market is really concerned about it, you'll see a little bit of weirdness within the tips auction. I don't really anticipate that at all. Now, just going over the whole week before we get too ahead of ourselves. So, Monday, we have Fed members speaking. We have Williams speaking at 9 a.m. We have Kashkari speaking at 1 p.m. Now, Kashkari can be fairly hawkish. Um, it's kind of just one to be aware of. Um, he can definitely say some things that can shift the momentum of the market. So, out of pretty much all the Fed governors besides Powell, usually it's Kashkari that is going to be the one to say something to move the market. So, um, even though I'm not really anticipating anything too important being said, I really do expect the Fed to still be fairly hawkish moving into this week, until we start seeing some of these collateral issues work themselves out a little better, and until we start seeing more of the data actually arriving. On Tuesday, we have industrial production at 9:15 a.m. That very likely won't move the market too much. Um, I believe that's been on a downtrend, so the forecast doesn't show right now, but the previous was pretty low. The forecast will probably be pretty low as well. Uh, we have Vice Chair Barr speaking at 10:30. Usually Barr doesn't say anything important at all. Um, Wednesday, we have the Atlanta Fed GDP now at 10:30. That can move the market just because there's been such a lack of data. That's really kind of the first major data set this week. Oil inventories doesn't really matter too much right now. The 20-year bond auction again at 1 p.m. on Wednesday. Then at 2 p.m. we have the FOMC meeting minutes along with Fed member Williams speaking. So again, Wednesday is going to be a very key day, pretty much the entire session, depending on what that Atlanta Fed GDP now gives us. Thursday, again, there's some employment, Philadelphia Fed Manufacturing Index. They're expecting a negative on that. I would agree with that. Kind of the whole thing we just discussed with the building permits are whatnot. We're just, or with the industrial production, we're just, production and manufacturing have really been kind of low right now. Existing home sales and everything. That's been doing pretty bad. Philly Fed employment, that will be a very key data set. No forecast amount right now. We will be keeping our eyes on that one. Come closer to Thursday. That's at 8:30 in the morning. Um, Probably biggest data set for Thursday is that one. Now that I'm really thinking about it, that's really some of the first employment information we've had in a month now, besides, some of the stuff that's been released on the side. Uh, Friday, let's see, Fed member Williams again at 7:30 a.m. So we have the global manufacturing PMI at 9:45 a.m. And then at 10 a.m., this is going to be very, very key. We have some of the inflation expectations, the 1 year and the 5 year. Currently, the forecast is basically the same as last reading, but I expect those to shift downward throughout the week. We'll see though. And we also have the Michigan consumer expectations and sentiment. Those are going to be very, very, very key data sets this week. That's Friday at 10 a.m. So pretty early in the morning. Uh, Other than that, though, we don't have any further data for Friday. Um, I am going to go into earnings, but I do just want to make sure that I covered my data notes. I covered that part. So Bitcoin is falling right now pretty aggressively, as pretty much everybody knows. And there is a major, major, major position at the 97,000, where it's the majority of the retail margin position. Um, that means that being below that means that the majority of retail holders are underwater. So just be aware of that a pretty deep liquidation could happen pretty quickly if margin starts getting pulled on these retail holders. So just be aware of that. This is kind of a collateral sell-off type event if we actually see it, further occur. We have major earnings this week with Nvidia. I'm going to talk about that in just a couple minutes here. The liquidations I just discussed with Bitcoin, but we've been seeing the liquidations throughout gold, silver, other precious metals. We've been seeing throughout equities like tech, healthcare. We've been seeing MBSs, treasuries. I mean, every market security has been getting liquidated in some form or another. So that's really telling me that there's a massive, massive, massive collateral issue going on. And when we see the DXY, which is the dollar, continuing to rise, that's telling me that people are continuously needing the dollar on demand, which further just pushes the whole collateral thesis. Um, so yeah, I think that covers the data. Let's go ahead and discuss the earnings. Now, the earnings this week, we have Nvidia on Wednesday, of course, which is always the king of earnings. That is the number one right now. But there are a few others that I'm interested in as well. XPEV, I actually don't know anything about the company, but I have traded their options quite a bit, and they move very, very, very well. I've actually made quite a bit on trading XPEV. I don't really suggest trading the earnings themselves, but it's just coming up, so I'm discussing it. I like trading XPEV quite a bit, especially if you can really time some of those upper and lower Bollinger moves. You can get a ton of movement on those options. Um, so that is on Monday in the open. Now there is a couple others. We have some Chinese earnings this week. Rip, Cooler, Target, that's going to be very key, just because we want to know what's going on with consumer sentiment. And, Target, Lowe's, Walmart, these all are front runners with, having consumer sentiment and knowing what exactly is happening with the American consumer. So I definitely want to hear the guidance on them. Same with Home Depot. That's important. Now, Wix, I haven't discussed before, but it is something that my buddy and I have been trading a little bit. Um, I'm kind of disappointed because the last time we entered, I believe, at the 111 range, and it took off all the way to 180 something. I only had a few shares. He had, I believe, 200 something, so he did really good on that. But Wix is a AI website designer. I don't really know if they're profitable or not, but I know that there's a lot of movement to be had in that still. NVIDIA, again, we have NVIDIA in the after hours. That's going to be super crucial in Wednesday's after hours. And we also have Panwa, Palo Alto. Let's see, we have Webull in Thursday's after hours. That's not something I'm really too interested in, but I do have my shares still at 9 something, 10 something, whatever it is. Still holding on to that. I use Webull as a brokerage. I think they're great. So, um, that's my way to be invested in the brokerage I'm in, that I hold through. So, but yeah, mainly this week is going to be Nvidia, but don't let the early morning earnings kind of be ignored because some of these are, again, some of the largest corporations in the world, and especially like Walmart. For example, say Nvidia has a super good earnings in the after hours, and the whole market's just rallying and everything. But say come Thursday morning, Walmart projects that consumers are just falling off a cliff. Really, uh, that would be enough, I think, to not just halt all the progress of Nvidia's earnings, but to actually cause selling within the market. So you have to be very careful with some of these large consumer names right now because there's this, again, there's a massive battle between which thesis is right. Is it going to be the upward inflation, or is it going to be the labor market is crumbling? If one of these companies show that the labor market's crumbling, if they show that they are doing heavy layoffs, then absolutely it can really kick some reality into the market. So just be aware of that. I'm not trying to fearmonger. It's something that we're at the stage of the economy and the market and everything right now that you have to be hyper aware of these things. You know. So yeah, that's the earnings this week. Very big earnings, but potentially a whole lot of nothing as well, besides really Nvidia. So, am I going to be playing any of these earnings this week? Not really. Um, I might do something with NVIDIA, but very likely not. And I'm going to discuss this in the TA section, but there's kind of a lot going on with the market right now that we need to be aware of. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, we are going to try to keep the technical analysis parts fairly quick tonight, as there's just a lot to discuss, and really I just want to focus on getting all my thoughts out properly before I feel too bad. So, with that said, we had a pretty large selling day on Friday. That means that currently, even though the 5 mAh is up at the 678.36 range, on your screen it's going to show the 675.60. That's what I expect the 5 mod to open around, as we have had a few selling days within the last 5 sessions. So with that major selling day, it should really pull the 5 mod down quite a bit. Just make sure you mark where it is on the open. It's going to be a very key level over the next few days. The 10 mod has pulled down roughly $2. So currently is at the 676.92. Um, with that pulling down, it's just further consolidating our moving averages, and it's actually pulling the 10 mod underneath the 20 mod, which is a bearish thing. That is a bearish signal. We have the 20 mod at the 677.51, and again, the 20 mod is actually going to continue slowly kind of holding its weight at the 677 range, while the 10 mod and the 5 mod pull underneath it. So I did discuss this last week, how the moving averages can look like they're starting to pull very bullish and then all of a sudden sort of collapse. Well, this is that collapse, and that collapse is going to lead the 5 mod underneath the 10 mod and the 20 mod, which basically crosses both of our bullish or our bearish check marks of the 5 mod support being under the 10-day support and the 5-day support being under the 20-day support. So with the 5 mod opening essentially at that 675-60 range, um, that does put it below the 10 mod, that puts it below the 20 mod, and we did have a large 5 mod test that occurred about 1 to 2 sessions ago. So where do we go from here? Currently, we did have a push down to the lower Bollinger. However, we did not close at that level, and we did not hold that level during the close, or push underneath the level during the close. So that means that this was not a lower Bollinger move. This is a lower Bollinger rejection so far. Now, what that means is that we need to continue retesting our supports. And this is where it gets really, really, really tricky, because all of our supports are really locked in that same area. And here's kind of what it makes it. It makes it a very large range to be tested through. Um, for example, we have the 5-day moving average at the 676 or the 675.60 range, which means that the upper bounds of the 5-day moving average would be around the 677, 678 range. Um, However, the 20 mod is at 677.51, which means that the upper bounds of the 20 mod would be almost all the way at the 680. So you could be testing the moving average all the way from the lower bounds of our lowest moving average in here, which currently will be the 5 mod. That'll be around the 674, which currently in the overnight that we are at that level. So the 674 all the way to the 680, and you could be testing moving averages in that range where you could pull down and retest another moving average. So just be very, very careful. This is not the type of area that I would take short-dated contracts at all. This is the type of area where you really want to take pretty dated contracts. I want to say at minimum, a month. I would suggest about 3 months, really, because if you look at any major consolidation range, and we haven't had many to go through, but this was a good period, and this happened early in October, where we pulled down, we had a little bit of buying, not really enough selling though, and we had the moving averages really start turning a little bearish in here, um, which made some of us think that this is going to turn into a major sell-off. And well, what do you know? It ended up turning into major buying, ended up being a whole $30 move to the upside. And from there, then you could have shorted the upper Bollinger and, been within that short. So what I'm saying is that we're in a consolidated range right now with the moving averages, and we just rejected the lower Bollinger. but that doesn't mean we can't come back down and, hit that level again. The lower Bollinger will be opening up to the downside very soon here as the 20 MA starts slowly curving down. Now, with that said, and going through all of the moving averages and everything, we have a very, very, very key range here. And I'm going to pull up the drawings for a moment. I'm going to turn off the moving averages as we have our lower Bollinger really following the bottom of this major buying channel. And it's almost following it exactly. So far, that's telling me that they are trying to build support on this bottom channel. However, we are seeing the upper Bollinger start to curve into the bottom of this channel as well. So it's really limiting our upside. Um, remember we talk about the upper and lower Bollinger like the sides of a road. So, you know, if there's the upside available, then and if the upside's available, then it's really going to be that upper Bollinger that you need to target. Granted, I know we still have a ton of moving averages and everything to go through, but that's where you'd be targeting your upside. So if you're bullish, then you have quite a ways of, to look upward on this. Um, with this being potentially the bottom of a major buying channel, uh, it's not the worst place to enter. Again, you want to be in dated positions, um, because essentially we are right at that 20 mile range. Even though we're below it slightly, uh, this is still a very, very, very quality range to be entering. And when I say straddle, that means both a call and a put, same date, generally the same strength within the delta of the strike, so that they're holding the same weight. And the deltas will shift. Deltas are never a constant. Anyway, I'm going to turn off the Bollinger so there's not so much going on the screen. I apologize. But we are within this extremely large buying channel still, and even though we've had to expand this buying channel, and we did expand it within this last lower Bollinger rejection, if this does not fully reject, if this actually starts selling through that selling channel, then we will pull the support line back to this previous um, buying area. Sorry, my daughter's crying right now. It's driving me crazy. Um, we have a selling channel starting to occur, and this is what I have within the blue dotted line. Okay, this channel doesn't hold a whole ton of weight right now, but it does hold a decent amount. And let me go ahead and show this on the 4-hour time frame. And the reason why is mainly because of these two supports right here. Again, selling channels are sort of created out of massive buying, and these are the two selling supports within massive buying ranges. So this is telling us that this is a very well formulated channel so far. And so really we're getting into this corner right here. And this is the real story of what's going on, is that either we're going to continue along this buying channel and we're going to break past the upper selling channel, which is this blue dotted line, or we're going to see the bears win and we're going to see the orange channel broken through and we're going to see price action take towards the bottom of this white consolidation channel. Okay, and I will mark this with a purple arrow just to signify that. So that's really where we're at right now. Now, the actual market price, surprisingly, is almost exactly at the upper consolidation channel line right now. Um, if it wants to build support above that, then that's what I would be looking for if I was bearish or if I was bullish. Um, I was bearish, then I would look for this consolidation line to be broken into, And that would kind of tell me that, okay, they're really trying to target down further. Um, because so far, the buying line has been slowly being pulled out and extended, but eventually that's not going to happen anymore. Eventually, the structure is going to break from a buying perspective, and it's going to turn into a selling, trend. Because the market can't continue going sideways forever. Either it's going to start buying up again, or it's going to work its way to start selling off. The machine positioning does not like to just idle, and they're not. You could tell there's plenty of price action going on in here, but it's really starting to narrow. And not only is the actual price action showing us that narrowing, it's basically creating that cone. Um, but the moving averages are just continuously pulling into each other. We have a strong bout of consolidation, opens back up, strong bout of consolidation again, now getting ready to open up or open down. So we will see. Now, I do want to quickly go over this is the 4-hour time frame, so this is fine. Never mind. Um, yeah, this is looking good. Okay, so from the 4-hour time frame. Okay, this is what I got for that. Let me just look at the daily. Okay, all right, I know what I'm seeing now. Gotcha. Okay, 4-hour time frame. So we have a we have potentially a double bottom right here. Okay, and that's really what I'd be looking for as a bull, because here's kind of the issue. We had a major bout of selling right there. Okay. Now, was this to fill the buying we had from before? It does look like it. Okay. Now, I haven't really gone over this concept in quite a while, so I know many aren't going to be too familiar with it, but you have to think about these kind of as subtraction and addition. So think about buying as addition and selling as subtraction. Okay. When we have, and say this is a 10. Okay, we're going to make it super, super simple here. When we have plus 10 to the upside, and then we have negative 10, what does that mean? That turns to 0. So whatever this structure was has now been canceled out because of this selling. So now we have this structure right here. And again, we have the buying to the upside, which is the addition. And then we have the selling to the downside, meeting it almost dollar to dollar, which is the subtraction. Again, that's just another 0. Um, so what I'm trying to say is that we're getting a lot of price action for a lot of nothing. It's not setting new levels. Yes, we did hit all-time high, but that's not what I'm trying to get at here, and I think you all know that. Um, we haven't set new levels. We haven't created bull structure from here. For example, if I was looking for this selling to be invalidated, I would have wanted to see the buying all the way up to the very top of where the previous buying was. And that would tell me, okay, we're getting ready to have some real buying. Okay, because to invalidate that buying, we would have to have, you know, selling all the way back down again, which either this is going to create a bullish cup or a double top. So that's the concept there. Now, with that said, with the two structures we have currently, this creates the inverse cup and handle. Okay. But the thing is that sometimes the bottoms of the inverse cup and handles can turn into that double bottom, which can form the liquidity to pulls out. And this is really what the bulls need to be looking for, is that you want this prior structure broken from. Okay, if you see, for example, you see us pull up to say the 5 mall and then have a rejection back down, Um, that's actually breaking this former structure and pushing us into a new selling structure, which would suggest we're going to go back down below that buying channel. Hopefully that makes sense. That's just how my brain sees things. So that's really what I'm looking for here. Um, is that we have a lot of consolidation, and either they're going to claim this major consolidation channel, or they're going to work to really break above and continue the buying. And those buying structures should fully invalidate these prior buying structures, meaning we should see a higher high from that. We should see a higher high from that. Okay, so that's really what you should be looking for. Whether you're bullish or bearish, I know I kind of went over a bunch of different theses all at once, but um, that's how it works sometimes. So those are really the levels you're looking for. Um, again, we are below all the current moving averages, so if there's price targets you need to look for above you, then all you have to do is simply look at those moving averages because they are all above us right now. Um, if we're going to claim a level, we have to test and claim the moving average first. Uh, so essentially at this point, when you have all the moving averages above you, you can really just sit back and say, okay, if the market's going to start buying, then all I have to do is wait for essentially the 5-day moving average to be bought into and see buying from it. Meaning you start seeing the VVIX pulling down as you're pushing above that level, suggesting that okay, we're going to actually break above the 5-day moving average. We're going to start closing some of these gaps to the upside. Um, that makes it super, super easy. Uh, because we are in a very heavily consolidated range. It's not like we have a lot of movement between these moving averages right now themselves. So just be cautious with everything going on with the economic events right now, with Bitcoin selling off, and I'm going to discuss that here in a couple minutes, but there is a lot going on with the market right now to where we can really have some massive selling. I made a post about this earlier, but we're seeing some really, really wonky market conditions and collateral issues where we could really see trillions just get dumped out of the market very, 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 very quickly. So, not trying to scare everybody, but it's something you do have to be very, very, very concerned of. And I'm going to discuss how to kind of navigate that here in a minute. But let's go into Bitcoin. I think that's what we're discussing next. All right, and I'm going to show you all my weekly Bitcoin chart, and this has been a work in progress since basically early 2022. Um, you can find Reddit posts back when the chart was way back here, and these channels were all there and everything else. Oh, that's great. Anyway, with that said, this is a really strong Bitcoin chart. The yellow channel is the major buying channel, basically since the inception of Bitcoin. This orange channel right here is also a major buying channel ever since it broke back out um, of that. I want to say it was April, yeah, April 2023. We started seeing the buying again from that 15K level, and it basically bought up all the way to all-time highs at the 126,000, which is just incredible to think about that was literally $30,000 above the current price. Um, we have broken out of that channel, okay? And that is obviously not a bullish thing. Um, that's a pretty bearish thing here. And we can delete some of these older arrows. And what that means is that there is a large selling channel here. And that selling channel is going to be right here. And it is blue, and it has a lot of range down on it. Okay, now we're going to go to the daily chart here, just so that this looks a lot more reasonable to work with. And this shows our major selling channel. Now, with the major selling channel, we have officially broken out of our major consolidation range. I wish I could highlight that actually. Used to know how to do it. Um, I'll have to figure that out later. Uh, we have broken out of our old major consolidation channel. And because of that, we now have to look at some previous major selling ranges. Now, the first major support here is going to be at that 74 0.5K range. Sorry, I can't talk. Going to mark that in red just so that everybody can really see that. Um, Sorry, I'm just taking a look at this. We also have a major consolidation range right towards the bottom of the 90K. So we're also going to mark that. And what color should we make these? Let's make these purples that we just know. No, we'll keep them red. We'll keep them red, nice and visible. Okay, so we know our exact selling ranges. Now, this major buying channel, we are going to shrink it down slightly just because I don't want it to be so visible. Because really what matters is the yellow channel here and the blue channel. Within the blue channel, we have quite a ways down. We have really these two red ranges, which is the 90.4 and the 74.7. Okay. Um, the 74.7 actually goes down to 74.4, but you get the picture. Essentially, either we're going to have a major bounce off of the 90.4 or we're going to have a major bounce at that 74. Um, if you do not see bounces from those two levels, and again, just because we're in a selling channel doesn't mean that you always sell. There's been plenty of selling channels where you will, head all the way to the top of the channel, then back down, top of the channel, head back down. So I would be looking for a bounce at that 90.4. And then I'd also be looking for a bounce. If you happen to see this get liquidated through, then you should be really looking for the 94. It's like 94.4 something. And these are two massive ranges to be buying into. Okay. Reason why those are massive ranges to be buying into, it's really hard to show this on the daily time frame because it doesn't cover everything, but those are major support ranges. And those were major support ranges through prior buying ranges, which means that it holds a lot of weight. Now, if we see those two ranges fully liquidated, okay, which I really don't think we will, um, but there is the concern that if we do, then this is the next pocket of liquidity. Now, this one gets pretty deep, okay, because this one could get all the way down to that 47.9, and I don't even really want to talk about that right now because that's to me not really within question right now. Um, but the upper end of this range does take us to the 68.9 again. And if we do enter the upper range, that does mean that we can start to trade within that range. So it's something to be cautious about. Um, Sorry, I'm just trying to look at everything here. Really, what I'm concerned about is that this is going to turn into a major inverse cup. Okay, and from that major inverse cup, we would anticipate some form of handle, and from that handle, it could look very bullish, and it could come right back down and take us pretty deep within this selling channel. Again, I'm not really expecting Bitcoin to go down too much further. It's owned by government. It's heavily owned by major institutions. There is a major retail margin level at the 97,000. So they could be currently liquidating below that range to really knock people out of their position. But I would be looking for buying to be occurring again within Bitcoin. And just turning off all the drawings for a moment and going to the daily time frame. The major reason Bitcoin is seeing the selling is because of the, let's see, DXY. It's the DXY. When Let me step back. There used to be a inverse relationship between the dollar and Bitcoin, where if the dollar was moving up, Bitcoin would be moving down. If, the dollar was moving down, Bitcoin would be moving up. That correlation split a little bit, but it still holds fairly true. So when we're seeing major collateral positions being needed in dollars, that means that people are actively having to buy dollars. And how do you buy dollars? Well, you liquidate things that are worth dollars. That's Bitcoin, equities, treasuries, whatever. And what is one of the most easily collateralized securities out there right now. Well, that's Bitcoin. You can absolutely dump Bitcoin at a moment's notice and 24/7 without having to make phone calls, all sorts of stuff. So it really doesn't surprise me that Bitcoin is being beat up as much as it is right now. Um, but that's something to continue to watch out for is if the dollar is continuing to rise, then very likely Bitcoin will be continuing to take a beating. And yeah, that's what I'd be looking for. I wouldn't be trying to take any short duration positions on this type of stuff. This isn't the type of event I'd be trying to take short duration positions into. Um, this is very much the type of event I'd be going months out. Really just accept the exposure of if we're going to have a massive sell-off, collect the premium on that. If we're going to see all the selling bought up, then, collect the premium on that. So that's Bitcoin. And quickly going over TLT/treasuries. Uh, let's go over the daily time frame. Turn on the moving averages and the Bollinger Bands. So I'm going to turn off the drawings for a moment. We did have a pretty large rejection the other day. And from that rejection, it did sort of invalidate some of this bullish structure that we could have had. Like that potential inverse head and shoulders we discussed currently is out of the picture. Now, with that said, is that we are still within this major consolidation channel, and we still have all of the moving averages above us, so we can see a double bottom occur, especially if a lot of that Fed hawkishness does start to pull back a little bit with the market actually starting to, have a little bit of a sell-off from it. But I am looking at that to potentially turn into a double bottom, because if that does, then that will take us all the way from the bottom of this consolidation channel back to the top. And from there, we can work on the larger cup, form the handle, and the breakout to the 95.20. Within the current timeframes, within the contracts and everything I've been taking for December and March, everything still looks good in the bullish front. However, we cannot ignore that there is a really gnarly inverse cup and handle formed here. And from that inverse cup and handle, the market absolutely can start trying to push us down to the lower side of this major buying channel. And, that would take us back towards the 86.60 range. That's really what many of the bears have been looking for a while. I don't think we will get it, but there has been a lot of hawkishness from the Fed. And with the hawkishness from the Fed and with the collateral issue sort of unwinding, there has been people needing to sell treasuries, and selling treasuries obviously will push down on TLT. It will pull the yields higher because that means buyers get, um, you know, they get their way in the auctions. Uh, so far we're not seeing major levels broken yet. For me, it's this 1.75 range on the 10-year that I'm really looking at. So we'll be monitoring that throughout the week with the 20-year auction on Wednesday and everything else. And I am also heavily looking at the HIG, and currently the overnight is at 81, but it was down to 79 for a moment. So there is a little bit of bidding between the spread going on there. But on HIG, with TLT showing that major bear structure, HIG also has that major bear structure, which potentially means that equities can start really selling off. Again, HIG is a major indicator for market sell-offs. Prior to the last major sell-off in April, we did see some of that selling in HIG. For example, if you just cut the screen off to the side right now, um, that looks almost exactly to how our market is right now. And then all of a sudden it dumped off a cliff. So this could very un you know likely turn into a major unwinding situation, which is why I have been shorting the HIG. Uh, if we get the unwinding that I'm really expecting with the collateral crisis and everything, HIG is going to drop very substantially. And I'm still targeting that mid to late December put range for the 78 strike. Um, if that range does not hit, then I will be going out to March, but I am really expecting this collateral event to sort of take its toll pretty soon here. Um, if Nvidia does well this week, though, that can put pressure on the upside, where you can see buying within the HIG because a good Nvidia earnings does translate into selling of good quality debt. So there's that, but just remember that BlackRock just had to liquidate literally one of their AAA loans. And this was a loan that was going for 100 cents on the dollar, um, went down to zero. So that means that credit conditions are tightening very heavily. And yeah, I'm sure everyone is going through their books right now, and I'm sure that's a large reason why we're seeing a lot of this selling through Bitcoin, through equities, through treasuries, and just kind of everywhere. Is that I'm sure some of these big names are starting to tighten down their books a little bit after seeing a lot of these credit blowups over the last few weeks. Even tonight, we had another major airline um, file for bankruptcy. So it's like almost every single day now we're hearing about major bankruptcies, layoffs, just not good news. So that's kind of the whole thing we're looking at with treasuries right now. Not so much looking at each sense of the price action, but more so just what will happen if we have the actual, credit unwinding that we're expecting. So overall, that's kind of what I'm looking at for the week. Um, really not trying to position to the upside or the downside. I'm really just wanting to be cautious and monitor some of this data. and see what goes on with some of these treasury auctions. I think that'll be very, very telling in the overall market direction and where we're headed. So, um, I do want to say keep your eyes on the VVIX, and again, this is not the VIX. This is the VVIX. It's the VIX index futures. Um, if this is above the 98, that means that there is selling occurring. This pulled up all the way to the 117 during Friday's session. Uh, well, uh, a penny away from it, but um, and then it pulled down to 107. So that showed that there was some cooling during the session. But just keep your eyes on this, especially when we start getting back to our really key moving averages, because if this starts spiking when we get to those ranges, that could be telling you that we're going to reject the range and start selling. So just be aware of that. But yeah, with that said, I hope everyone has a great week. I hope you have a great day tomorrow, trade safe, and thank you all for watching and supporting, and I will talk to you in tomorrow's video. Take care, everybody.